Hey traders, this is Blake Morrow with Trader Summit, and with me today I have Mr. Richard Matthews of Pardus FX to break down all the excitement in the FX market right now. How you doing, Mr. Matthews?
I'm good. I'm not sure there's that much excitement, is there really? I think
Oh,
that
it's so exciting. It's groundbreaking, actually, the volatility that we're seeing here. But, there is a lot for us to talk about. I mean, I guess front and center, I got to ask your opinion. What you feel about this debt ceiling kabuki theater that we're getting here in the United States? Is it influencing your positioning or how you're approaching the FX market right now?
um yeah, it is actually starting to weigh a little bit on the markets and weigh on me. I mean, it's just going on and going on and going on. If I'm right now that the deal they hammered out over the weekend now has to go to Congress and then the Senate, and there'll be some more horse trading and this and that and whatever, and we get nearer the precipice where nothing is agreed, and we fall off it on June the 5th, and all hell breaks loose, and then they agree. Uh,
Yeah, right. So, I mean, and this has been kind of the sentiment between, myself, some other people that I talk to about, do we get to a point where the market has to, to panic to really get the attention of lawmakers? Do you
yeah,
think we get to that point?
I wonder if we do. They seem very entrenched, don't they? It's more than the Tea Party. They seem harder in their approach than the Tea Party was. I think 2011, correct me if I'm wrong, that we actually got to the point when the S&P completely fell out of bed, dropped a huge amount. I'm going to get my numbers wrong. Was it 16% in one day? Uh, I didn't know the number off the top of my head, and it's gone. Which then knocked their heads together, and you actually got an agreement. Whether you get that has to happen again, who knows? I mean, they look to me diametrically opposed, and I think whatever does happen is going to hurt the market. It's going to, there's a lot of stimulus going to be pulled out of the market, and this fiscal, you're going to have a fiscal tightening going on. So I think it is important. It's pretty boring to watch, I've got to say.
It is boring to watch, but I was just going back and taking a look back at 2000. I'll do this with you
Yeah.
here just so you can actually see what had happened during that point, and correct me if I'm wrong. Let me go ahead and get the chart out for you. This is the S&P, and this is a weekly chart. So going back towards
Oops.
2011, which would be right here, you
Yeah.
can see that this is probably the move you're referencing
Yeah.
back in June, July of
Yeah. Drop what? Three.
I mean, you take the entire move, we're talking about 19%, 20%.
Yeah.
Now obviously
Just in a pretty quick as well, in 2 or 3 days, wasn't it?
yeah, I mean it's a fairly large clip, even if you're looking at the one weekly candle when it was all happening.
Yeah.
So the question begs, and this is where you talk from an FX perspective, and this is where your experience in the markets is really going to set a precedence. Does the dollar lose? If something like that happens, and we see the equity markets, let's just throw out a 5% move in the S&P. Does the dollar be a beneficiary, or do you see a different currency like maybe the yen or maybe the Swiss franc take that role in the meantime?
It's really interesting, isn't it? Because you think stock markets drop, flight to a safe haven currency, ultimate safe haven currency still is the dollar, but they're dropping because the dollar's got a problem. So how can you really buy the dollar? It's sort of like fuzzy logic to me. So I would look to probably buy Swissy or buy the yen. And I also think, interestingly, the yen, that the Japanese central banks just starting to get a little bit irritated with the levels that it's at, and I think they're throwing out a warning or two in the last 24 hours. We're not that happy with it up here.
Yeah,
And
I
I
think you
think,
got a deputy governor that started speaking up last night, if I'm
yeah.
not mistaken. So
So I
yeah,
think you can see that really was. And, to me, it's counterintuitive, isn't it? You go to the safe haven, which is causing the problem. It doesn't make sense.
Right, right. So let me ask you this: we're past the debt ceiling, but we haven't passed this. We haven't passed the point where there's inflation is really coming down in the UK, right? So
Yeah.
what's happening in the UK, and how are you seeing the sterling right now? Because we're seeing the sterling firm up near the 124 level, but how do you feel about what the Bank of England's doing and what they're going to be doing?
Bloody clowns. There's an article in the Times, which is normally quite a staid newspaper in the UK, on, I think it was on Saturday. We had a long weekend like you did. And it was talking about gilt yields, or the UK bond yields going back up again. And even if they have gone up, to me, it's incredible that you can borrow money in Greece cheaper than you can in the UK, and people are willing to lend. And I love Stelios. Don't kill me for saying this. And I love Greeks very much, but it seems really odd that Greece can borrow money cheaper than the UK can. And gilts have gone back up towards levels they were back in September when we had Liz Truss. Now, at that time, people were calling it a moron government, right? Which is pretty harsh. But now I read over the weekend it was referred to as a moron Bank of England, because they had just got their head stuck in the sand. And all credibility has been lost, as far as I can see. They've got one person who is a hawk on there. They've got to raise rates. They're going to raise them by 25 basis points at the next meeting, but they really should be hiking them up by 1% and just hitting it on the head, because inflation just isn't dropping here. It's dropping in the States, maybe starting to drop in Europe, but it's not here. And food price inflation, I know I keep going about it, it's just ridiculous over here. It's just every week something else goes up. Sunak, our wonderful Prime Minister, is now talking about having a price cap. So a loaf of bread will be at this price all across the supermarkets. And it's just an idiotic idea. We tried price caps back in the 70s. They didn't work. Now, whether he's saying that's a negotiating tool for the unions and saying, okay, well, I'm freezing prices, you've got to settle on a lower pay rise, I'm not sure. But you've still got a lot of strikes going on over here. And the unions do have collective bargaining, much more so than in the States, I think. And so you can start to get price wage spirals of inflation, which is just the worst thing that you can do.
So is that? I mean, I know it's kind of a silly question, I guess. Is it bullish the sterling then? I mean, because the Bank of England is going to be forced to be more aggressive.
Yeah, it should be. And interesting, and I think it's a really key thing that when the CPI number came out last week, it was worse than expected. So you would expect to see everyone's going to go, oh, interest rates got to go up, so we'll buy sterling on the back of it. Sterling popped up a tiny bit, then got given. So that's a real vote of no confidence in the Bank of England. And the only thing which I think starts to temper my view is that the press and the TV over here are starting to openly criticise the Bank of England. And I'm a great believer, if it's in the press, if the press is saying sell sterling, it's time to buy it. So that's the only reason that I'm a little bit starting to temper my view a little bit, because it's in the press, and the press will put pressure on the Bank of England.
Makes a lot of sense to me, and that's the kind of contrarian indicators that you might see there in the UK. Yeah. Well, Mr. Matthews, Richard, it's always great to see you, and it's great to catch up. I know we didn't get a chance to catch up last week, but great to catch up with you. Can you tell us how to follow your work at Pardus FX and what you do there at Pardus FX?
Yeah, I help some clients. I write some analysis that basically help run the business. You can follow me on Twitter, which is at Dickie Matthews, or at Pardus FX, and on LinkedIn, which is Pardus FX on LinkedIn. And I, most days write a column, always a Monday column about what's going to happen, and my views on the lovely Bank of England.
Awesome. Well, you can catch some of those pieces of work we actually put here on the Traders Summit site. So if you like what Richard has to say, make sure you give him a thumbs up, subscribe to the channel down below so you don't miss any of this exclusive content every week that we have together. Richard, great to see you, and I hope you have a wonderful week trading.
And you have a good week. Cheers, Blake. Bye now.
Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.